We've rolled out a whole new homepage, and we're also rolling out new email programs and new ways to really personalize the experience for the customer and make sure that we have the relevant shopping experience now for consumers.
That was JCPenney's CEO Mark Rosen yesterday outlining his company's online strategy with that all-important holiday shopping season approaching. Well, that officially kicks off this Friday. We're talking about the busiest, or one of the busiest, shopping days of the year, Black Friday. Retailers certainly looking to get a big boost here by customers having less cash on hand than last year. For more on the outlook for the holiday season, let's bring in Boston Consulting Group's senior partner and global head of retail, Brad Loftus. Brad, you have put out a pretty extensive report here on expectations for this upcoming holiday season. Set the stage for me in the expectations for retailers.
Well, the good news is, Akiko, the expectations are actually pretty good. If you look out at the consumer, they are feeling stress, more so in the customer sentiment, as you've seen in many places, but definitely in our report, as showing signs of that stress. So you have 23% of consumers worrying about paying bills, lots of concern about inflation, lots of concern about potential recession. But despite that, intent to spend on Black Friday is 69% are intending to spend on Black Friday and or Cyber Monday, which is up from an intention of 51% last year. And if you're looking at the spend amount, the average is $445, which is up 6% from last year. So while there's a longer term concern and stress that the customer has more so than they did 6 months ago, the intention to spend over Black Friday is still pretty strong.
Yeah, you know, on the one hand, we've heard about savings, discretionary spending increasingly being depleted, and yet the sentiment, the concerns around where the economy is headed haven't necessarily matched the spending habits that we have seen. If you look at something like retail sales, I mean, talk to me about how you think that's likely to play out and how there's a bit of a divergence maybe, especially based on income level.
Right. I mean, if you talk to our chief economist, and we recently published some stuff, there's a bunch of conflicting data out there in the market. But if you look at the whole, across the quintiles, and this is data back to the September-October timeframe, all the different income quintiles in the economy are still better off than they were in COVID. Now, you're starting to see more deterioration at the lowest income quintile from last year and the year before, with the stimulus money abating and inflation taking a greater bite out of household spend. But you're starting off potentially the healthiest base we've ever seen. So while you're coming down from that and you're coming down differentially with more impact at the lower socioeconomic level, it's off a pretty strong base. But I do think there is concern out there. So the concern's out there, but the spend hasn't shifted to match the concern yet, if that makes sense.
It's been interesting to hear some of the commentary coming off of earnings calls to see what customers are spending on. Best Buy yesterday talking about a pullback in spending overall. If you're talking about electronic goods, you've got somebody like Dick's Sporting Goods showing a little more support from customers, especially on athletic wear. When you look at this, the next few months or the next month, really, where do you expect customers to spend? What are they putting their money on?
Right. If we looked at the intention to spend and realizing customer behavior does not fully match intention, but the strongest areas we still see are travel and entertainment. The intention to expend, every part of every group we looked at, with the exception of baby boomers, was going to spend an increased portion on travel. So we had a net increase of 56% on travel. If you look at entertainment, it was up 34% vis-a-vis last year on the intention. So those are the two biggest categories. There is still some strength in DIY and furniture and other areas, but I would say travel and experience are the largest, with some of the folks having made purchases on the physical goods more last year and switching to travel and experience.
Boston Consulting Group senior partner and global head of retail strategy, Brad Loftus. Appreciate your insight this morning.
Thank you. Happy Thanksgiving.